Hello everyone. Now today's lecture we are going to discuss with all the multiple choice questions from your upcoming exams point of view. Okay, you are going to have 30 marks mid semester objective MCQ based questions where they have said that 15 questions of 2 marks each are going to be asked. Now you all have already received the material of objectives with the answers marked in that. You all can see in front of you a table is being prepared by me. So from your upcoming exams point of view, 15 marks, 2 questions each means it will be mostly practical questions only. Chances of theoretical questions are very less. And as such, the objective material which is already provided to you, from that you can easily do the theory questions on your own because answers are already marked. So in this video lecture, I am going to guide you with the practical multiple choice questions. What I have done is all the years papers in past which have been asked in mid semester exams MCQ questions from 2008 to 9 onwards till 2019, I have divided all the questions into 35 different type of questions. Okay, so these 35 different type of questions I'll be solving in today's video lecture. And like question number 1 is your October 2019's question 218 in the study material. There is no similar question asked in exams in past. Now if you refer to question number 4 which I will be solving, 2008 to 9 there are 2 questions based on that concept, question 10 and 28, then 2009 to 10 49 and so on till October 2019 to 23. What I will be doing is I will start from reverse. Okay, I will start from reverse means I will take the recent examination questions in this video lecture, and then whatever are similar other examinations questions video lecture, either you can pause the video and at the same point of time you can try those questions on your own. Answers are already marked. Okay, you verify whether you are able to get them or not. I'll be solving just one question of each type. Other questions you all try on your own. In case if you are not able to get the answer, you already have my mobile number with you, 9426312774. You contact me. Whichever answer you are not able to get, you message it to me on WhatsApp. I'll get back to you with the answer of that particular question. So recent examinations questions will go in the reverse order and I'll solve 35 questions in this video lecture. And similar questions, either you can pause the video and try the questions at same point of time on your own, or you can attend all 35 questions first and then you can try with this remaining questions which are the similar ones on your own later on. Okay, so all of you take out your study material, take out October 2019's question number 218. That is the first question we are going to solve. Okay, understand it properly everyone. As a part of internal reconstruction, the preference shareholders agreed to waive means sacrifice the arrears of preference dividend of past 5 years. The company's capital structure consists of 8% 50,000 preference shares of rupees 10 each fully paid up. Which of the following accounting treatment is correct? Now they have sacrificed. We studied in internal reconstruction chapter that the entry for preference dividend will be passed only if it is paid. If the preference dividend is sacrificed, no entry is to be passed. So option A, B and C are not correct. No entry will be passed because the entire preference dividend is sacrificed. So correct option would be option number D. Now there are no other similar questions asked in past exams. Now question 219, look at question number 2 which we'll be solving. Okay, that is question 219. Under the internal reconstruction scheme, and this is important, unrecorded liability of 25,000 is settled by the company at rupees 15,000. So the unpaid amount of 10,000 will be done what? Now, since the liability was not recorded only in the books of accounts, so we will be passing the entry simply will pay 15,000 from capital reduction. So entry would be capital reduction account debit to bank account with the amount of 15,000. So with 10,000 we don't have to give any effect. Okay, for the 10,000 we don't have to give any effect. So neither it will be credited to capital reduction nor liability nor debited to capital reduction. Answer would be option C, not be recorded at all. Now all of you look at third question, that is question number 220. This we have done, this we have done. Now third question, that is 220. Okay. KC Limited holds 65% equity shares in NK Limited up to the date of acquisition. The operating profit means current year's profit earned by NK Limited was rupees 3 lakhs, while its total operating profits in the year of acquisition amounted to rupees 6 lakh 50,000. Okay, up to the date of acquisition does not mean current year profit. Up to the date of acquisition, the profit is 3 lakhs. That means it is pre-acquisition profit. Up to the date of acquisition means it is pre-acquisition profit. Out of the total operating profit of 6 lakh 50,000 means post acquisition would be 6 lakh 50,000 minus 3 lakhs, remaining 3 lakh 50,000. The balance of P&L account in consolidated balance sheet will increase by what amount? Now understand the question properly. Which amount do we record in consolidated balance sheet? If you remember, control chart A. Okay, in consolidated balance sheet we record control chart A, H Limited's share in revenue profits. Okay, this is what we record in control chart A, H Limited's share in revenue profits in the balance sheet, that middle amount. So what we have to do is in the revenue profits, post acquisition profits, out of 6 lakh 50,000, 3 lakhs are pre-acquisition profits. So we can say 3 lakh 50,000 are post acquisition profits. So what is this in control chart A, holding company's share in revenue profits? Revenue means post acquisition profits. So in this 3 lakh 50,000 which are post acquisition profits, holding company's share 65%. Okay, that comes to 3 lakh 50,000 into 65%, that is 2 lakh 27,500. This amount will be added in consolidated balance sheet. So balance of P&L account in consolidated balance sheet will increase by option A, 2,27,500. Make the correction. This is not the correct answer. The correct answer is option A, 2,27,500. There are no similar questions asked in past exams. Now question 4, what we will be doing is 223rd question I'll solve on the screen, and all these questions, okay, year 2008 to 9's question 10 and 28, 9 to 10's 49, 10 to 11's 57, 11 to 12 73, 88, September 16 157, September 2017 180, and October 2018 194. You can pause the video and try immediately these questions which are similar to question 223, or else you take a screenshot of this just now, pause the video and take the screenshot, and at the end, after all 35 questions are over, then similar to question 223, you try all these questions on your own, or you can try them right now on your own after pausing the video, and then whichever answers you are not able to get, you send me the message on this number. I'll get back to you with the practical solution of that question. Okay, so I am solving the fourth question, that is 223, and you all will be trying on your own similar to 223 all these other questions. So look at question 223. The holding company's ratio is 9:7. That means 9 by 16 and 7 by 16 is holding and minorities share. The annual sales of subsidiary company include rupees 80,000 sold to holding company. Okay, so intercompany transaction, of which 60% remain unsold. We are concerned with unsold goods only when we try to find the unrealized profit as on the last date of the accounting year. The subsidiary company sells goods at 20% on cost. On cost means I told you the shortcut 20 by 120 will be done. So the amount of unrealized profit to be adjusted in the consolidated balance sheet is. Now, who has sold to whom? Sales of subsidiary company means you can say it is upstream sale. Okay, subsidiary has sold to holding company means it is upstream sale. So how will you find the unrealized profit? Okay, 80,000 is the sales into goods remaining unsold are 60% into profit 20 on cost, so 20 by 120, and since it is upstream sale into holding company's share, that is 9 by 60. All of you do this calculation. 80,000 into 60% into 20 by 120 into 9 by 16. So do you all get 4,500? That is the correct answer. Now you all take the screenshot of this. Similar to question 223, you all have to try all these questions on your own. Okay, they are similar to question 223, and whichever answer you are not able to get, you can let me know. I'll help you out in the same. Okay, you can message to me for the same. So this is how I'll be solving 35 questions right now, and similar ones you all will be trying on your own. Take the screenshot, or else you can pause the video and solve all these questions right now advisably, and then message to me immediately whichever answers you are not able to get, or you can solve them at later stage also after you finish all the 35 questions. If you solve them right now, it will be a good practice. You get confidence with this type of question, and you can say this is an important question. It has been repeated in so many exams. In one exam, it has been repeated even two times, this kind of question. Okay. Now, fifth one is question 226. Look at it, everyone. Fifth question 226 I am solving. The holding ratio is again 4:1, so 4 by 5 and 1 by 5. The share capital of subsidiary company consists of 1,20,000 equity shares of 10 each, fully paid up, and its reserves and surplus showed a balance of rupees 7 lakhs. The claim of minority shareholders. Now, minority shareholders claim, I'll give you a shortcut. Share capital plus all the profits into minority interest. I repeat, share capital plus all the profits into minority interest. Whenever any question of minorities interest is asked, you simply do this. So share capital is equal to 1,20,000 shares of 10 each means 12 lakhs. Okay, 1,20,000 into 10, 12 lakhs, plus minority interest is 7 lakhs. So 19 lakhs into minority interest is 1 by 5, you all can see here. So into 1 by 5. Okay, directly in calculators in exams you can do 19 lakhs into 1 by 5, that is 3,80,000. So this shortcut you can follow for the MCQ questions. Share capital plus whatever profits, reserves, etc. are given. The total of all of them simply multiply with minority interest. Now, similar to this question number 226, you can try question 216 on your own. Just now, pause the video and try that question on your own, and if you don't get the answer, you can message to me. Okay. Now, sixth question I'll be taking up with question 227. So, look at it, everyone. A Limited absorbed business of B Limited and agreed to issue an amount of fully paid 5% debentures of its own at 96%. Issue at 96% means you can say 4% discount. To discharge the 6% rupees 2 lakh debentures of B Limited at a premium of 5%. Discharge, we discussed earlier, also will always give us the agreed value. The value of debentures to be issued by A Limited is. Now, value of debentures to be issued by A Limited, how we will find? First of all, 2 lakhs of debentures are there. In that, we have to pay 5% premium, that is 10,000. So we have to pay them 2,10,000. Okay, this workings we have been doing in the chapter of amalgamation. Now 96% means 2,10,000 divided by 96 rupees. So how many debentures would be issued? 2,10,000 divided by 96. 2187.5 debentures will be issued. So what would be the value of debentures? 2187.5 into 100, that is 2,18,750. This would be the value of debentures. Okay. Now similar to question 227 also, there are no other questions asked in past. Now question 7 is 228 of the recent exam October 2019 that I am doing. The balance in workmen compensation reserve as on 31st March was rupees 1 lakh, while the liability for compensation to workers materialized at rupees 1 lakh 50,000. So out of 1 lakh 50,000 only 1 lakh is available, means the remaining 50,000 we have to take from capital reduction account. They are talking about internal reconstruction chapter. So which of the following is correct? Capital reduction account will be debited by remaining rupees 50,000. The entry would be workmen compensation reserve account debit 1 lakh, we can take from that. Then capital reduction account debit 50,000 and two workers liability account 1 lakh 50,000. Similar to question 228 also, there is no question in past. Now question 8, 231. Okay. Eighth question what I am doing is question number 231 of October 2019 exams. X Limited acquired 7,500 equity shares of rupees 10 each, 5 paid up, out of 10,000 equity shares of Y Limited as on 31st August 2018, on which date books of Y Limited showed a debit balance of 5,000 in P&L account, means it's a loss, and 25,000 in general reserve. So on that date it showed, means it's all pre-acquisition. Okay, at the time of acquisition already there is a loss of 5,000, means it's pre-acquisition, and already 25,000 is there in general reserve, that is also pre-acquisition. If the cost of acquiring the shares is 41,250, then the cost of control or capital reserve. Now cost of control or capital reserve, how do we find? Last workings, control chart B. First you take investments of, what is the cost of acquiring the shares? 41,250. Means holding company has invested 41,250 in the shares of subsidiary company. Now two things we used to minus. One was share of holding company in the face value. Now here face value will take the paid up value, because remaining 5 rupees holding company will have to pay in future. So face value means here you will take 7,500 into 5. Okay, I repeat, because so far we had already have been having fully paid shares only, but here they are partly paid up, so you take 7,500 into 5. 37,500 is the paid up value of shares acquired, minus you would minus the share in capital profits. Now capital profits here, general reserve on the date of acquisition, pre-acquisition is 25,000 and loss of 5,000 is there. So 25,000 minus 5,000, you all can say that pre-acquisition profits or capital profits are 20,000 only. In that holding company's share, holding company has acquired 7,500 shares out of 10,000, means 2,500 are with minority interest. Both are divisible by 2,500, so 3 is to 1. 2,500 into 3, 2,500 into 1 is the ratio of degree of control. So capital profits 20,000, okay, 25,000 reserve minus loss 5,000, 20,000. In that holding company's share 3 by 4, 15,000. Okay, 20,000 into 3 by 4, 15,000. So 37,500 and 15,000 we will minus 52,500 in control chart B. So 41,250 minus 52,500. How much is the negative amount? 11,250. Negative amount means it is capital reserve. So what is the cost of control or capital reserve? Answer C, 11,250. So similar to this question 231, you all pause the video and 2008 to 9's question 11 all of you try on your own just now. Okay. And if you don't get the answer, you can message to me. Now, ninth question I am doing 232, 233 and 244. Okay. Recent most examinations question I am doing right now. So look at question 9. From the following information, answer question number 15, 16 and 17. The book value of machinery of subsidiary company as on 1/4/2018 was 4,50,000, while its closing value on 31/3/19 was 4,05,000. Now, against 4,50,000, closing value 4,05,000 means what is the depreciation provided during the year? 45,000. So, what is the rate of depreciation? 45,000 is provided on 4 lakh. 50,000 value in the beginning of the year means the rate of depreciation is 10%. The holding company, while acquiring the shares of subsidiary company on 31st July 2018, revalued the machinery at 4,50,000. So let us make that entire working of revaluation. Okay. First, book value column, revaluation column, and then effects columns. First, on 1/4/18, beginning of the year, 1/4/18, the book value of machinery is 4,50,000. Then we will provide depreciation up to, okay, we will provide depreciation up to date of acquisition 31/7/18. So 4,50,000 into 10% into, now April, May, June, July, 4 months. So 4,50,000 into 10% into 4 by 12. For 4 months the depreciation will be 15,000. Means when the shares are acquired, then on 31/7/18, what is the book value? 4,35,000. Against that, the revaluation is done at 4,50,000. Means there is a revaluation gain or profit of 15,000. Okay, 4,35,000 and 50,000's difference, there is a profit of 15,000. Now we'll provide the depreciation up to 31st March 2019. So here we will calculate on 4,50,000 only. So 4,50,000 into 10% into remaining 8 months, 8 by 12. Okay, here we had done 4 by 12, now 8 by 12. So 4,50,000 into 10% into 8 by 12, remaining depreciation would be 30,000. Whereas here we will calculate the same on 4,50,000 again. So 4,50,000 into 10% into 8 by 12 will again come to 30,000. Means additional depreciation is nil. Additional depreciation is nil. And the book value is 4,05,000 in the books of accounts. But in consolidated balance sheet, we will record 4,20,000. Based on that, all the 3 questions can be answered if you make that workings of revaluation. Okay. So what all questions are asked? Let us see now. The revaluation gain. What is the revaluation gain or profit? We discussed 15,000. The depreciation is undercharged. Not additional depreciation we discussed is nil. So depreciation is undercharged by nil. And the carrying value of machinery in the, not considered, make it consolidated. In the consolidated balance sheet will be, so in the consolidated balance sheet, what value we will show? 4,20,000. Now based on this question number 9, all of you try question 208 of October 2018 exam on your own. Okay. Pause the video and try that 218 question on your own. Now look at the 10th one, question 235. Y Limited was absorbed by X Limited. The net assets of Y Limited and X Limited as on the date of absorption were 90 lakhs and 180 lakhs. So Y Limited was absorbed by X Limited. So X and Y. Net assets are, for X Limited, it is the net assets of Y and X was 90 and 80, 180 lakhs. Y is 90 lakhs and X is 180 lakhs. Be careful. It was agreed that the shareholders of transferor company will be allotted shares in transferee company in proportion of their intrinsic value per share. Considering the number of equity shares of transferor, now Y Limited was absorbed by X Limited means Y goes into liquidation, that is transferor company, and X is purchasing the business, that is transferee company. So considering the number of equity shares of transferor and transferee company, 50,000 and 8 lakhs. 50,000 is of transferor company, that is Y Limited. So 0.5 lakhs I can mention the number of shares, and 8 lakhs are the number of shares of transferee company X Limited. So what would be the intrinsic value of shares? Okay, net assets divided by number of shares. 180 divided by 8. So 22.5 lakhs is the intrinsic value of, 22.5 rupees is the intrinsic value of X Limited shares. and 90 divided by 0.5. 180 rupees is the intrinsic value of Y Limited's shares. Now they ask you the number of shares issued by transferee company as a part of purchase consideration will be how many. If you all remember in intrinsic value of shares in amalgamation, I told you whenever you want to find the number of shares, just reverse this ratio. Okay, I have given you this shortcut earlier. Means the ratio would become 180 is to 22.5. Okay. Now, they have asked you the number of shares issued by transferee company as a part of purchase consideration. Transferee company will issue means who is the transferee company here? X Limited. They will give how many shares to Y Limited? That is what is asked. Okay. So 180 is to 22.5 ratio means if in transferor company we have 0.5 lakh shares, 50,000 shares, then how many shares will the transferee company get? Okay, that is what is asked. Against 180 shares of, against 22.5 lakh shares, 180 shares would be given. So against 0.5 shares, how many? So do it everyone, 0.5 into 180 divided by 22.5. Okay, 0.5 into 180 divided by 22.5. 4 lakh. So how many shares would be given? 4 lakh shares will be given. Okay, so it's a simple calculation and I have told you this earlier also. First you find the intrinsic value of shares and then you reverse it to get the ratio. In that reverse you put transferor company's number of shares. So you can find out how many shares of transferee company should be given to match with the same value. This shortcut you all will be applying always. So what you all can do is based on this question number 9. Intrinsic value of shares, question number 9, 235. I have done just now. 2008 to 9, all of you try question 21 on your own right now. And 12 to 13, all of you try question 94 on your own. So take the screenshot, 8 to 9's 21st question, 12 to 13's 94th question. You all try this question on your own just now. Pause the video and try them on your own. Now all of you look at question 10th question which I am doing. Okay, this 10th was already done. Now look at 11th question what I am doing. Okay, 237th question. Rapid Limited absorbed the business of Fast Limited. Rapid absorbed the business of Fast means Fast goes into liquidation, that is transferor company, and Rapid absorbed, that is transferee company, and agreed to issue one equity share of rupees 10 each, 8 paid up at a premium of 4 means 12 will be the value. 8 paid up plus 4 rupees premium, so 12 will be the value, against 2 equity shares, and also to issue 10% preference shares of 10 each, 5 paid up at a premium of 3 means 5 plus 3, 8 will be the agreed value, against every 2 shares of Fast Limited. The share capital of Fast Limited consists of 3 lakh equity shares of rupees 5 each fully paid up and 2 lakh 8% preference shares of 10 each fully paid up. Then the amount of purchase consideration. So let us do it. How many shares are to be given by transferee company? Okay. So against, first we do it for equity shares. Okay, first we do it for equity shares. Against 2 equity shares of transferor company, you'll be issuing 1 equity share of transferee company. So how many equity shares are there? 3 lakhs. Against 3 lakhs equity shares, how many equity shares of transferee company will be issued? 3 lakh into 1 by 2. 1,50,000 equity shares will be issued and they'll be issued at 12 rupees as we discussed. 8 plus 4, 12 paid up value. So 1,50,000 into 12. What is the value of equity shares that will be issued? 18 lakhs. Now, same way if we work out for preference shares, then against 2 preference shares, 1 preference share is to be issued, same ratio. Okay, against 2 preference share, 1 is to be issued. So against 2 lakh preference shares, how many are going to be issued? 2 lakhs into 1 by 2, 1 lakh. And 1 lakh preference shares are valued at rupees 8. Okay, 5 plus 3 of premium, 8 rupees. So 1 lakh into 8, 8 lakhs. 18 lakhs plus 8 lakhs. What is the purchase consideration? 26 lakhs. So all of you can see this here. Okay. Question 238 is also based on question 237. Considering the information given in question 2020 means it was the 20th question of that particular semester exams. Here 20 means you can say 237th question. The transferring company will credit what amount to security premium? Okay, understand this. 1,50,000 equity shares at 12. In that, what is the premium? 4 rupees is the premium. So on 1,50,000 equity shares, 4 rupees of premium will be 6 lakh rupees. And same way, here we are going to give 1 lakh shares. And in that 8 rupees, what is the premium? 3 rupees is the premium. So 1 lakh into 3. How much premium in preference shares is there? 3 lakhs. 6 lakhs plus 3 lakhs. What is the total premium? 9 lakhs. So option D is your answer. Okay. Now this both were 11th question. So based on this 237 and 238, so many questions you have to try on your own. All of you take the screenshot of this question numbers. Question 24, 46, 52, 77, 93, 143, 187, 209. All of you try all these questions on your own and verify you get this or not. And it's an important question. In every exam it has been asked. Finding the purchase consideration has been asked in every exam. Take the screenshot and try all these questions on your own, or pause the video and try all these questions on your own and verify whether you get the answers or not. Now, taking question 12, 239. The company had issued 12% debentures of rupees 4 lakhs. As per reconstruction scheme, it has been decided to issue new debentures to existing debenture holders carrying interest at the rate of 15% per annum. Old was 12% or 15%. But of such value that the income of debenture holders is maintained. This workings also we have been doing in amalgamation chapter. Presently, what interest are the debenture holders earning? 4 lakhs into 12%. Presently, they are earning 48,000 of interest. Now, in the new company, they'll get 15% interest and still they want to earn 48,000 only. So, if interest is 15, face value is 100. So, if interest is 48,000, then what should be the face value of debentures? Do it 48,000 into 100 divided by 15. 3,20,000 must be the value of debentures. Then at 15%, they will earn the same interest of 48,000. Okay. So based on this question 239, there are no other questions asked in exams. Okay. So we take up with question 13, that is 240. Look at question number 240. That is the 13th question in this lecture. H Limited acquired 75% shares in S Limited on 31st July 2018. There is a date of acquisition on 1/4/2018. S Limited had 1/4 means opening balance. In its books, general reserve of 28,000 and P&L account balance of 32,000. These all are opening balances. The net profit of current year is directly given. After transferring 12,000 to general reserve was 1,08,000. Pre-acquisition profit is. Let us make that working note. 3 what we used to do, that is control chart. Profit and loss account and general reserves workings. Let us do it. Total, pre and post. So this will help us in finding this answer, because what is the question asked to you? Pre-acquisition profits. Okay. Now first we make it for P&L account, then we make it for general reserve. So in P&L account, what is the opening balance? Opening balance of P&L account is 32,000. That will entirely go in pre-acquisition column. Then what is the profit during the year? The net profit for current year after transferring 12,000 to general reserve is 1,08,000. So profit during the year is 1,08,000. That we will distribute in pre and post in what ratio? 31st July means April, May, June, July. 4 months is to 8 months. 1:2 is the time ratio. So 1,08,000 into 1/3. Okay, 1,08,000 into 1/3, 36,000. And 1,08,000 into 2/3, that is 72,000 is post acquisition profits. Now similar calculations we make for general reserve. What is the opening balance of general reserve? 28,000. That will entirely go in pre-acquisition period. Then what is the transfer during the year? 12,000. So that 12,000 we will distribute in the time ratio 1:2. 12,000 into 1 by 3, 4,000. 12,000 into 2 by 3, 8,000. Now what are the total pre-acquisition profits? 30, 60, 80, 82, 88, 96, 1 lakh. And what are the total post-acquisition profits? 72,000 plus 8,000, 80,000. The question asks this pre-acquisition profits, that comes to 1 lakh. Okay, so this is our answer. Now similar to this question 13, that is 240, all of you try question 70 and 90 on your own. Okay, take the screenshot, or if you're going to try later on, or else pause the video and try 70 and 90 on your own just now. Okay, now look at 14th question, that is 242. Amit Limited absorbed Biren Limited. Now Amit absorbed Biren means Biren is going into liquidation, that is transferor company. Amit is acquiring, that is transferee company, and took over all fixed assets at 110% and liabilities at 90% of their book values. It issued 2 lakh equity shares of 10 each, 8 paid up, and 12% 9,000 debentures of 100 each to the shareholders of B Limited, and also paid cash of 5 lakhs to the debenture holders of B Limited, and the amount of purchase consideration is. And purchase consideration, we include only the amount payable to shareholders. Okay, I repeat, only the amount payable to shareholders. So this debenture holders, debenture holders, what we are paying in cash will not be included. Okay. However, this 9,000 debentures of 100 each are given to the shareholders, that will be included. Whatever amount you pay to the shareholders will be included. So we are giving 2 lakh equity shares of 10 each, 8 paid up, means to the shareholders we are giving 2 lakh equity shares at the rate of 8 rupees, 16 lakh rupees. Further to the shareholders, though we are giving debentures, but we are giving it to the shareholders, so it will be included. 9,000 debentures of 100 each, we are giving it to the shareholders, so it will be included. That is 9 lakhs. So 16 lakhs plus 9 lakhs. What is the total amount we are paying to shareholders? 25 lakhs. That is the purchase consideration. This 5 lakhs cash will not be included because that we are paying to debenture holders. And in purchase consideration, we include the amount paid to shareholders only. So similar to this question number 242, there is no other question. So we take up with question number 243. Okay. That is 15th question. A Limited acquired B, business of B Limited. So B Limited is going into liquidation, that is transferor company. A Limited is purchasing it, that is transferee company. The assets and liabilities of B Limited were taken over at an agreed value of, assets agreed value is 82 lakh 50,000 and liabilities agreed value is 65 lakhs respectively. A Limited agreed to issue 75,000 equity shares of 10 each fully paid up and 10% preference shares, 50,000 preference shareholders of B Limited respectively. Okay, 10%, 50,000 preference shareholders of B Limited respectively. 50,000 preference, make the correction, 50,000 preference shares of rupees 10 each. Okay, they are the shareholders of B Limited. The realization expenses of 25,000 were paid by the transferee company. That makes no relevance in finding the purchase consideration. Now you are asked to find the amount of capital reserve. So first let us find the net assets. Assets are 82 lakh 50,000. Against that the liabilities are 65 lakhs. Means what are the net assets that of transferee company we are acquiring? The net assets acquired of transferee company are 17 lakh 50,000. Now against 17 lakh 50,000, what is the purchase consideration we are paying? We are giving 75,000 equity shares of 10 each, means 7 lakh 50,000, And further, what purchase consideration we are paying? 50,000 preference shares of 10 each. So we are giving 5 lakhs in the form of preference shares. Means against 17 lakh 50,000 we are paying them 12 lakh 50,000. How much less we are paying? We are paying less of 5 lakh rupees, that is our capital profit. So it will be transferred to capital reserve. Okay, we are paying 5 lakh rupees less, that is our capital profit, that will be transferred to capital reserve. Similar to question 243, that is question 15 also, there is no other question asked in exams in past. Now look at question 244, that is 16th question. The company decided to reduce the paid up value of equity shares by rupees 2 per share without reducing its face value. The company has equity share capital of rupees 3,20,000 divided into shares of 10 each, 8 paid up, means 3,20,000 divided by 8, 80,000, 40,000. 3,20,000 divided by 8, 40,000 equity shares are already there in the company. The new balance sheet of the company after implementation of internal reconstruction shall disclose paid up share capital of how much? Now, they are going to reduce the 2 rupees per share but without reducing its face value. Means that paid up value of 8 will become, okay, 8 minus 2, 6. So same 40,000 equity shares of rupees 10 each. Paid up value will become 6 of rupees 10 each. Face value will remain same, but paid up value will become 6. So 6 each paid up. Means what value will come in the balance sheet? 40,000 into 6, 2,40,000. Okay, in the balance sheet, what will come is 2,40,000. Out of 8 paid up, 2 rupees will be reduced, means paid up value will become 6 rupees. There are 40,000 equity shares right now, so 40,000 into 6, 2,40,000 will appear in the new balance sheet. There are again no similar questions to 244. So now 245, that is the 17th question we are solving. On 31st March 2019, the capital structure of PQR Limited showed debentures worth rupees 55 lakhs, on which the interest of 10% per annum was outstanding for last 2 years. Under the internal reconstruction scheme, they were handed over the freehold property. Okay, first, what is the interest outstanding for 2 years? Let us find out. 55 lakhs into 10% into 2 years. So that comes to 11 lakhs. 11 lakhs of interest has been outstanding for the last 2 years. We have to pay them 55 lakhs plus 11 lakhs, total 66 lakhs. What we have to pay them? 55 lakhs plus 11 lakhs, 66 lakhs. Now, they were handed over the freehold property having book value of rupees 50 lakhs but realizable value of 62 lakhs. Against 50 lakhs, we are giving, freehold properties value, we are giving them at the realizable value of 62 lakhs. So 50 and 62 lakhs, you can say 12 lakhs is going to be transferred to capital reduction. Further, against 66 lakhs, we are paying them 62 lakhs only. So even this 4 lakhs, what we are paying them less in full satisfaction of their claims, that will also be transferred to capital reduction. So the capital reduction will be credited with 12 lakhs plus 4 lakhs, 16 lakhs. I repeat, freehold property 50 lakhs, its realizable value 62 lakhs. So 12 lakhs increase in the freehold properties value goes to capital reduction. Debenture holders 55 lakhs plus 11 lakhs of interest, we will pay 66 lakhs. But we settle them by paying 62 lakhs of freehold property. We are paying them 4 lakhs less. That also goes to capital reduction. So 12 lakhs plus 4 lakhs, 16 lakhs will go to capital reduction. Now similar to question 245 also, there is no other question. Okay. Now similar to 247, there are many questions. So this 18th also, all of you would mark it important, 247. Okay. So I am doing this 247 on the screen, and then all the similar questions you all will try on your own. On 1st March 2019, Strong Limited drew 3 bills on its subsidiary Week Limited. So Strong is the holding company, Week is the subsidiary company, of rupees 20,000 each. 3 bills of 20,000 means total 60,000 of bills are drawn, which was duly accepted. On the same day, Strong Limited discounted one bill with the bank at 10%, so that becomes outside liability. Whatever you discount or endorse, that we don't have to pay to each other, so that becomes outside liability. On 31st March 2019, the balances of bills receivable account of Strong and Weak Limited were 80,000 and 50,000. Strong Company 80,000, Weak Company 50,000. Total bills receivable are 1,30,000. The amount of bills receivable to be shown in the consolidated balance sheet. So from this we will minus intercompany transaction. Out of 60,000 of 3 bills, 1 bill of 20,000 becomes outside liability because that is discounted with the bank. So 60 minus 20, 40,000 is intercompany liability. That we will subtract. So 80,000 plus 50, 1,30,000 minus 40,000. What amount of bills receivable will come in the consolidated balance sheet? 90,000. I repeat, 3 bills of 20,000 each are drawn, means 60,000 of bill are drawn on the one company by other company, intercompany transaction. But out of that, one bill of 20,000 is discounted with the bank, that becomes outside liability. Out of 60,000, 20,000 becomes outside liability, means still what is intercompany liability? 40,000. So from 80 and 50,000, 1,30,000 of bills, we will minus intercompany liability of 40,000. So in the balance sheet, what amount will come in the outer column? 90,000. Now similar to this question 247, all of you pause the video and try all these questions 15, 38, 109, 129 and 188 on your own just now and verify whether you get the correct answers or not, or take the screenshot and then later on you can try all these questions on your own which are similar to 247. Now question 19 I'll be taking up with 148 question. All of you look at it. Question number 148 of your study material. The share capital of S Limited comprises of 50,000 equity shares of 10 each fully paid up. On July 1, 2015, holding company acquired 40,000 shares in S Limited at a premium of rupees 3 per share. Now cost of investment, okay, not cost per but cost of investment and holding percentage of H in S Limited respectively are. So 40,000 shares are acquired at a premium of 3 rupees, means cost of investment will be 40,000 into 13 rupees. So cost of investment will be 40,000 into 13, that is 5,20,000. And out of 50,000, 40,000 equity shares are acquired by holding company, means 10,000 are minority interest. So 40,000 and 10,000, 4:1. Okay, if you cancel all the zeros, 4:1, 4 by 5, 1 by 5 is the minority ratio, holding and minority ratio. If you multiply with 100, you'll get it in percentage. So 4 by 5 into 100, 80% is the ratio of degree of control. So 5,20,000 investment and 80% holding company's ratio. D option is our answer. Now after question 19, look at 20th question, that is 190 question number what we are solving. Okay, look at it. Question number 190, that is 20th. H Limited acquired 80% issued capital of S Limited on 1/8/2017. Okay, 80%, 20% is the ratio of degree of control. 1st August is the date of acquisition. The consolidated profit after tax of H Limited and S Limited for the year ended 31/3/18 is 18 lakhs. Proposed equity dividend of H Limited is 4 lakhs and S Limited is 2 lakhs. The amount to be deducted as proposed equity dividend from consolidated profit after tax while determining the amount of profit to be carried forward to consolidated balance sheet is. So if you remember that second part of P&L statement, how we used to find the amount to be carried forward to consolidated balance sheet. In that proposed equity dividend, first you record holding company and then subsidiary company. Holding is 4 lakhs, subsidiary company is 2 lakhs. And then you subtract H Limited's share in equity dividend of S Limited. So in that 2 lakhs, you'll minus H Limited's share 80%. that is 1,60,000, that you will minus. So finally, what amount of equity dividend will be subtracted from profit after tax in the consolidated balance sheet? 6 lakhs minus 1,60,000, 4,40,000. This amount we will subtract from profit after tax in the second part to find the profit to be transferred to consolidated balance sheet. So answer should be 4,40,000. Make the correction. This is the correct answer. Not option D, none of these. 4,40,000 is the correct answer. So similar to question 190, all of you try 136 question on your own, or else you can take the screenshot, and similar to 190, you can try 136 later on. Now 21st, all of you mark it important again, because many times it has been asked in exam, similar one. So 192 I am doing on the screen, then you try 1, 2, 3, 4, 4 questions on your own. Look at question number 192. That is the 21st question now. On 1/4/2017, H Limited acquired 80% equity shares of S Limited at a price of rupees 6 lakhs. The share capital of S Limited consists of 50,000 equity shares of 10 each. If the share of capital profits and revenue profits of H Limited in S Limited are 28,000 and 1 lakh, capital profits share is 28,000, revenue profits share is 1 lakh, then it results into goodwill or capital reserve is asked in 4 options. So we'll make the workings of control chart B. First, we'll take investments of holding company in the shares of subsidiary company. So H Limited acquired 80% equity shares of S Limited at a price of 6 lakhs. Means what are the investments of holding company in the shares of subsidiary company? 6 lakhs. Then we minus 2 things: face value of shares held by holding company and holding company's share in capital profits of subsidiary company. What is the face value of shares acquired by holding company? Share capital of S Limited consists of 50,000 equity shares. 80% are acquired by holding company. So 50,000's 80%, 40,000 into 10. 4 lakhs is the face value of shares acquired by holding company. Okay. From 6 lakhs, we will subtract 4 lakhs face value of shares acquired by holding company. And what is H Limited's share in capital profits? If the share of capital profits and revenue profits of H Limited and S Limited are 28,000 and 1 lakh. So 28,000 is the share of H Limited in capital profits. 4,28,000 if we subtract from 6 lakhs. Okay, 4,28,000 if we subtract from 6 lakhs, then 1,72,000. Positive answer means it is goodwill. Okay, positive answer means it is goodwill. So do you have the option of 1,72,000? 72,000 goodwill and capital reserve are there, but 1,72,000 of goodwill and capital reserve is not there. So none of these is the answer. Okay, I hope everyone is clear with this. Now, all of you try similar to this. Question number 51, 82, 164 and 186 on your own. Pause the video and try 1, 2, 3, 4 questions on your own: 51, 82, 164, 86, or take the screenshot and you can try these questions later. Even 22nd is an important question because that has been asked in exams several times. So 198 I am doing, and then again 4 questions you always try on your own. Look at question 22 which I am doing now. That is 198th question of your study material. H Limited acquired shares of S Limited on 31st August 2017. The profit and loss account of S Limited showed a debit balance means loss. Okay, debit balance means loss of 1,50,000 on 1/4/17, that is opening balance, and a credit balance means profit. Okay, credit balance means profit of 90,000 on 31/3/2018, that is closing balance. They have asked you capital profit or loss. So let us make that workings of P&L account. What workings? Total, pre and post. Okay, total, pre and post. Now we start with opening balance. Opening balance is a loss of 1,50,000. So negative amount 1,50,000 entirely we go in pre-acquisition period. And then profit during the year, we'll find closing minus opening. So what will be the profit of current year? Closing is profit of 90,000 minus opening is loss of 1,50,000. So minus minus will become plus. 90,000 plus 1,50,000, 2,40,000. Now, since you have acquired the shares on 31st August, April, May, June, July, August. 5 months is pre-acquisition period and 7 months is post-acquisition period. So 5 by 12, 7 by 12. 2,40,000 into 5 by 12 is 1 lakh and 2,40,000 into 7 by 12 is 1,40,000. So minus 1,50,000 plus 1 lakh minus 50,000 is pre-acquisition or capital loss and 1,40,000 is revenue or post-acquisition profits. What is asked in the question? Capital profit or loss? There is a loss. In capital loss there is 50,000. So D option is the answer. Now similar to this question 198, all of you try these 4 questions on your own. Question 8, 37, 102 and 152. Take the screenshot. Try that question right now on your own or take the screenshot and you can try it later on similar to 198. Now 23 is also important because so many times it's repeated. So 200 I'm doing right now and then again 1, 2, 3, 4, 5, 6. 6 questions of similar kind have been asked in exam. You'll try on your own. So look at 23rd question, that is 200 question number. H Limited valued machinery of subsidiary company S Limited at rupees 6 lakhs on the date of acquisition 1/10/17. The effect of the same has not been given in the books of S Limited, which charges depreciation of 10% per annum on opening value of the machinery. Closing value of the machinery as per balance sheet on 31/3/18 is 5,22,000. Additional depreciation to be charged to revenue profit would be. So we'll make that complete workings of the revaluation of machinery, working note 3 what we used to make. Very first of all, we'll find the opening value. Suppose the opening value was 100 minus rate of depreciation is 10 to 90. Against that 90 rupees at the end of the year, the value is 5,22,000. So what would be the value in the beginning of the year? 5,22,000 into 100 divided by 90. 5,80,000 would be the value in the beginning of the year. Okay. Now we make that workings, book value, revaluation and effects. Very first we start with opening value on 1/4/17, beginning of the year. That we got as 5,80,000. Now the shares are acquired on 1/10/17, so we'll subtract depreciation up to 1/10/17, that is 6 months. So 5,80,000 into the rate of depreciation we worked out, it is given as 10%. So into 10% into 6 months, 6 by 12. So that is 29,000. 5,80,000 minus 29,000. On the date of acquisition, the value of machinery is 5,51,000 on 1/10/17. Now on the same date, the revaluation of machinery is done at 6 lakhs. Okay, H Limited valued machinery of S Limited at 6 lakhs on the date of acquisition. Against 5,51,000, 6 lakhs means you can say 49,000 is the revaluation profit or gain. Okay. Now after that we'll count depreciation up to end of the year, that is 31st March 2018. But we'll count on opening value 5,80,000 only. So it'll come same. 5,80,000 into 10% into 6 by 12, 29,000. But here the depreciation will be calculated on 6 lakhs. So 6 lakhs into 10%, that is 60,000 into 6 by 12, that is 30,000. Now this difference is 49,000 and this difference additional depreciation what we have to charge is 1,000. Okay, 1,000 will be the additional depreciation that we will have to charge. In the balance sheet, the value is 551 minus 29,000, that is 5,22,000 in the balance sheet. But in our consolidated balance sheet, 6 lakhs minus 30,000, what we will write is 5,70,000. This value will come in the consolidated balance sheet on 31/3/18. So this entire workings we make. Now what is the question as additional depreciation? So additional depreciation we got as 1000. Okay. So similar to this question 23, that is question 200, what I have done just now. All of you try question 5, 105, 128, 155, 162 and 167. 6 questions all of you try on your own. Right now you try and then verify whether you are able to get the answers or not, or you can take the screenshot and pause the video and try it later on also. Now look at question 211, that is 24th question. Single question is there, so not so important, but anyway, any exams the questions can be repeated, so you all must be knowing the answers. Balance sheet of XYZ Limited as at 31/3/18 disclosed 30,006% preference shares of 10 each. Preference dividend was in arrears for 3 years. 50% of the dividend was paid in fully paid equity shares of rupees 10 each in full settlement of the claim. The amount debited to capital deduction account under the scheme of internal reconstruction shall be. Now whatever amount is paid, only that much is recorded in case of preference dividend contingent liability. So here 50% of the dividend is paid. First of all, let us find the total dividend. 30,000 into 10. The preference share capital is rupees 3 lakhs. Okay. In that 6% is the rate of dividend, and for 3 years it is in arrears. So 3 lakhs into 6%, 18,000 into 3 years, 54,000 is the amount of dividend in arrears. Now against that 54,000, 50% of the dividend is only paid. That is 27,000 of dividend is paid in the form of equity shares. So the journal entry would be capital reduction account debit to equity share capital account. With what amount? 27,000. So what is the amount to be debited to capital reduction? 27,000. Similar to question 211, no other question is there in your exam so far. Now question 213, that is 25th question. Look at it. A Limited acquired B Limited based on the intrinsic value of both the companies. Find out the number of equity shares issued by A Limited towards the purchase consideration from the below given information. Today only we discussed similar this intrinsic value question earlier also. Reverse the intrinsic value to find the number of shares. However, since now I have marked it, I'll do it. Realizable value of assets and liabilities is given, so we can find for A Limited net assets and net liabilities. Okay. For A Limited, net assets would be how much? 2,80,000 minus 30,000, 2,50,000. For B Limited, net assets would be how much? 2 lakhs minus 50,000, 1,50,000. And what are the number of shares in A Limited? 50,000, and in B Limited 1 lakh. So if you divide that, you'll get the intrinsic value of shares. 2,50,000 divided by 50,000, 5 rupees. 1,50,000 divided by 1 lakh, 1.5 rupees is the intrinsic value of shares. Now you are asked find out the number of equity shares issued by A Limited. So we'll reverse it. In what ratio will the shares be given? 1.5:5. What shares will be issued by A Limited to B Limited? A has acquired B, so B is transferor company and A is transferee. B is going into liquidation. How many shares does B have? 1 lakh. Okay. 1 lakh is not the number of shares actually. Share capital, shares of 10 each fully paid. 50,000 means 50,000 divided by 10. 5,000 are the number of shares. 1 lakh divided by 10. 10,000 are the number of shares. It doesn't make any difference. Here if you take 5,000 and 10,000, even if you take 5,000 and 10,000, your ratio will come same. Okay. 2,50,000 divided by 5,000 would be 50, and 1,50,000 divided by 10,000 would be 15. Still the ratio will come same only. You'll reverse it, so ratio would come to 15:50. Okay, it would come to 15:50. Now, in B Limited there are 10,000 shares. So how many shares will be issued by A company to B company? 10,000 into 15 divided by 50. 10,000 into 15 divided by 50. Do it everyone. You reverse it. Simple shortcut, I have given it to you earlier also. So 3,000 equity shares will be given. Okay. To satisfy the same purchase consideration, 3,000 equity shares will be given. So answer is option C, that is 3000. I hope everyone is clear with this. So what you have to do is just reverse. Okay, just reverse after finding the intrinsic value of shares, and then whatever are the number of shares of transferor company, you put the number of shares of that, and you always find the number of shares to be given in transferee company. So this is how you have to solve it. Now similar to this question what we did right now, 213, there are no other questions. So 26 is important that I am taking up now. 214, and similar to that, 3 questions are there that you'll be trying on your own. So look at question number 214. 26th question. H Limited has in stock goods worth rupees 42,000 supplied by its subsidiary company S Limited, on which the latter made a profit of 20% on cost, so we'll do 20 by 120. One more thing, H Limited has in stock goods supplied by subsidiary company means it is upstream sale. Okay, supplied by subsidiary company means it is upstream sale. Subsidiary is selling to holding, child is selling to the parent. The controlling interest of H Limited, the controlling interest of making H Limited and S Limited is 75%. That is the degree of control. This stock should be shown in consolidated balance sheet at what amount? So first we find the unrealized profit. Okay, how do we find the amount of unrealized profit? Understand this. First of all, 42,000 is there in stock means already it's the goods remaining unsold, into profit is 20%, so 20 by 120 into 75% because it is upstream sale. Okay, so we'll take only holding company's share. So if we do 42,000 into 20 by 120 into 75%, means what is the unrealized profit? 5250. Now, what stock will come in the consolidated balance sheet from 42,000? Okay, no other stock is given. So from the stock of 42,000, you will subtract the unrealized profit of 5250. Means what amount of stock will come in the consolidated balance sheet? 42,000 minus 5250, that comes to 36,750. This amount will come in consolidated balance sheet in the outer column. So your answer is option A, 36,750. Now similar to this question 26, there are so many questions, so all of you try question 48, 103 and 138 on your own, 3 questions on your own, or you can take the screenshot and try them later on. Okay, either you pause the video and try these 3 questions on your own, or you take the screenshot and try them later on. Now look at 27th question, that is 217. Okay, 27th question, that is 217. X Limited has sundry creditors of 6 lakhs. As a part of internal reconstruction scheme, the sundry creditors agreed to waive, means sacrifice 40% of their claim, and to accept equity shares of rupees 1,60,000 of their renewed claim in part settlement, not full settlement, part settlement. The sundry creditors will be shown in balance sheet after reconstruction at what amount? Now, 6 lakhs of creditors are there, 40% they waive. So from 6 lakhs, 40% they sacrifice, that goes to capital reduction, 2,40,000. Now remaining amount what is payable to them is 60%, that is 3,60,000. Now out of this 3,60,000, they say they accepted equity shares of 1,60,000 in part settlement. Okay, from 3,60,000, 1,60,000 we have given in the form of equity shares in part settlement. How much is still payable to them? 2 lakhs we have not settled. That will come in the balance sheet. The amount still payable to them, 2 lakhs, will come in the consolidated balance sheet. So similar to this question number 27, there is only one question. So all of you try question 166 on your own just now. Pause the video and try it on your own, or take the screenshot and you can try it later on. Now question 28, I will be solving 163 and mark it important. There are 1, 2, 3, 4, 5 similar questions. Look at question 163, that is the 28th question I am doing. On July 1, 2016, H Limited acquired 12,000 equity shares of S Limited for a consideration of rupees 15 lakhs. Share capital of S Limited consists of 15,000 equity shares of 100 each. So out of 15,000, 12,000 are with holding, means 3,000 are with minority shareholders. 4 is to 1. Okay, 12 divided by 3 is 4, 3 divided by 3 is 1. 4 by 5 and 1 by 5 is the ratio of degree of control. The balances of general reserve and P&L account of S Limited are as under on July 1st, that is on July 1, 2016 means the capital profits, and as on 31st March means the closing balance. So you'll get closing minus capital profits as the revenue profits. But what is asked? The amount of minority interest shown in the consolidated balance sheet as on 31st March 17. Now for minority interest, I gave you this shortcut earlier also, that you just find share capital plus total profits into minority interest. So that is what we are going to do over here. Share capital is how much? 15,000 equity shares of 100 each, that is 15 lakhs. Share capital is 15 lakhs plus total profits. Now, total profits directly take on 31st March only, that is the total profits, okay? Otherwise, you take capital profits plus revenue profits. So if you do revenue profits, 3 lakhs minus 2 lakh 40,000, you'll get revenue profits as 60,000, but then we are considering the total profits. So even if you do 2 lakh 40,000 plus 60,000, you'll get 3 lakhs only. In short, directly take the closing balance, that is 3 lakhs. So 3 lakhs and 2 lakh 50,000 are the total profits, that is including general reserve. That we have to multiply with the minority interest, that is 1 by 5. Okay, this shortcut you will apply in all the minority interest questions. Total profit means closing balance can be directly taken if it is given in the question. So 15 lakhs plus 3 lakhs plus 2 lakh 50,000, that is 20 lakh 50,000 are the share capital plus total profits closing balance. That we will multiply with 1 by 5. 20 lakh 50,000 divided by 5, that is 4 lakh 10,000. So minority interest will come to 4 lakh 10,000. That is option A. Okay, so quite simple. Now similar to question 163, there are so many questions to be tried on your own. All of you try 19, 55, 87, 104, 153 on your own just now. Or else take the screenshot and you can try it later. Now question 29 also important because it has been asked so many times. So 165 I'll do it, and then 4 questions you'll try on your own. Look at question 165. 29th. The share capital of S Limited consists of 75,000 equity shares of 10 each fully paid upon 1/10/16 H Limited. Acquired 60,000 shares in S Limited at a premium of rupees 2 per share. The ratio of holding and time ratio is. So ratio of holding, 60,000 shares are required out of 75, means 15,000 is minority interest. Both are divisible by 15. 16 divided by 15 is 4. 15 divided by 15 is 1. So 4 is to 1. Okay, 4 by 5, 1 by 5 is the degree of control. And 1st October 2016, so April to October, 6 months is pre, and October to March, 6 months is post. 1 is to 1 is the time ratio. 4 is to 1 is the degree of control, 1 is to 1 is the time ratio. So option A is the answer. Now similar to 165, all of you pause the video and try question 26, 30, 53 and 79 on your own, or else take the screenshot and you can try these questions later on. Now 30, there is only one question, 171, so not so important, only once it has been asked in exams. 171, that is question number 30 for us. Debtors are 15 lakhs and 12 lakhs of holding and subsidiary company. Creditors are 25,000 and 35,000. During the year, subsidiary company had sold goods worth rupees 5,000 on credit to holding. So that is intercompany transaction. Okay. What amount? 5,000. You'll minus from debtors as well as creditors. And also purchase goods worth rupees 4,000 on credit from holding. That is also intercompany transaction. So 9,000. Total intercompany transaction is 9,000. That we will minus from debtors and creditors. At the time of preparing consolidated balance sheet, what amount of consolidated debtors and creditors would come? So debtors would come as, okay, debtors would come as 15,000 plus 12,000 minus 9,000. So 27,000 minus 9, 18,000. And creditors would come as 25,000 plus 35,000, that is 60,000, minus 9,000, that is 51,000. So 18,000 and 51,000 would be the amount. Option C. Similar to question 30, there are no other questions asked in exams. So we directly take up with question 140, and one more is only there similar to this, so not so important. Look at 31st question, that is 140. On 1/4/2015, H Limited acquired 70% shares in S Limited at a price of 1,75,000. The share capital of S Limited consists of 9,000 shares of 10 each. The pre-acquisition, not re-acquisition, make it pre-acquisition. Okay. Pre-acquisition profits and post-acquisition profits. Pre and post-acquisition profits of subsidiary company are pre are 80,000 and post are 75,000. So capital profit is 80,000, revenue profit is 75,000. Goodwill account of both the companies reported in the individual balance sheets is 20,000 and 6,000. Then the amount of goodwill shown in the consolidated balance sheet would be how much? First, we make control chart B and find the goodwill amount from that. Okay, so control chart B, how do we used to make? What all things were there in control chart B? Investments. What are the investments of holding company in the shares of subsidiary company? H Limited acquired 70% shares at a price of 1,75,000. From that, we have to minus two things: face value of shares held and share of holding company in the capital profits. What are the face value of shares acquired? Now, face value 9,000 shares, 70%. So 9,000 into 70% into 10 rupees is the face value. Okay, 9,000 into 70% into 10 rupees. So 9,000 into 70%, that is 6,300 into 10 rupees face value, that is 63,000 is the face value of shares acquired. And share in capital profits, 80,000 are capital profits, pre-acquisition profits. Ignore the post-acquisition profits of 75,000. So 80,000 into 70% is the ratio of degree of control. So 56,000. 63,000 plus 56,000, that is 1,19,000. Now if you minus 1,75,000 minus 1,19,000, then 56,000 is the goodwill what we get. Now already there is a goodwill of 20,000 plus 6,000, 26,000 in the balance sheet. So goodwill in the balance sheet, H Limited 20,000, S Limited 6,000. Further we add this goodwill of 56,000. So 20 plus 6, 26 plus 56, 82,000 is the total goodwill that will come in the consolidated balance sheet. Okay. Now similar to this question 140. There is question 31. All of you try question 31 on your own. Now 32nd question I am doing 141st question. 32nd, that is 141. So all of you can pause the video and try that question 31 on your own, or else take the screenshot of that and try the things on your own. Okay, take this screenshot. Similar to 140 is 31. Take the screenshot. You can try it later on. Question 141, that is 32nd question I am taking up. Be attentive. H Limited acquired 80% issued share capital of S Limited on 1st October 2015. Profit after tax of S Limited for the year ended 31st March 16 is 3,48,000. The amount of profit to be transferred to capital reserve while preparing consolidated P&L account. So in consolidated P&L, the fourth workings what we used to make will make that. Opening balance of P&L account is not given, so nil. Further, we used to add current year's profit after tax. So what are the current year's profit after tax of subsidiary company? 3,48,000. From that, we used to subtract preference dividend. What is the amount of preference dividend? So we can find amount available for equity shareholders. No amount of preference dividend is given. So 3,48,000 itself is the profit available for equity shareholders. Now from that we'll find pre-acquisition period. 1st October means April to September. 6 months is pre-acquisition period. So 3,48,000 into 6 divided by 12, that is 1,74,000 is pre-acquisition profits. Opening balances nil means total capital profits are 1,74,000 only. In that we will find holding company's share, that will come in capital reserve. Holding company's share is 80%. So 1,74,000 into 80%. What amount of capital reserve will come? 1,39,200. This is the capital reserve that will come in consolidated balance sheet. 1,39,200. Okay, similar to 141, there is no other question. So look at the next what we have to try now, 100. And there are two similar questions which you'll try on your own. So 33rd question now, very close to the end of the lecture. Look at question 100. From the following transactions, ascertain the effect in capital reduction account. Creditors are 80,000 settled fully by cash payment of 55,000. So in capital reduction, 80 minus 55. What amount will go in capital reduction? 25,000. That will go in capital reduction. So capital reduction account we have to credit. Okay, we have to credit capital reduction account with 25,000. But that amount is given here as debit, so that option will not come. And in credit, what is given is 55, that option will also not come. So none of the options A, B and C. Similar to this, 33, all of you try question 36 and 69 on your own. Pause the video and try that on your own, or else you can take the screenshot and try it later on. Now look at question 106. That is question 34. Okay. H Limited acquired 75% shares in S Limited. Okay. Further, okay, it should be again S Limited supplied to H Limited. So that is upstream sale. Okay. Goods of rupees, invoice value 50,000, of which, not of which, of which 60% of goods were still in stock, so unsold. Still in stock means unsold, of H Limited. Now S Limited made a total profit is directly given 10,000 on goods sold by H Limited. So at the time of preparation of consolidated balance sheet, what adjustment is to be done? Now first let us find the unrealized profit, then only we can find the adjustment to be done. Total profit is directly given 10,000. Okay, and then into goods remaining unsold are 60%. Okay, 10,000 into goods remaining unsold are 60%, and since it is upstream sale, 75% we will do holding company's share. So 10,000 into 60%, that is 6,000 into 75%, that is 4,500 unrealized profit. So what adjustment is to be done? 4,500 we have to minus from P&L account and minus from stock. 4,500 reduced from stock is correct. Reduce 4,500 from P&L account is correct. So option D is the correct answer. Both A and B above. Okay. Similar to this question 34, there is no other question. So last we try 65 and then 13 you'll try on your own. Last question 65. Look at it, everyone. Be attentive. H Limited acquired 80% shares of S Limited on October 1, 2015. At the time of acquisition, plant and machinery of S Limited was revalued by H Limited at 20% above its book value of 5 lakhs. So directly it's given book value means it was on 1st October only. So directly 5 lakhs, 20%, you can say 1 lakh, it is valued higher on that date. At the time of consolidation of balance sheet on 31st March 16, the share of H Limited in profit on revaluation. Okay, profit on revaluation, as I said, is directly 1 lakh because on that date itself, on 1st October itself, book value is 5 lakhs. 20% it was revalued above the book value. So 1 lakh is the revaluation profit. In that 80% that is holding company's share. So that comes to 80,000. So 80,000 of capital profit will be there. Option A. So similar to this 35, question 65, all of you try question 13 on your own. So all the different variety of questions are covered in this video lecture, and you all would have taken the screenshots and marked the similar questions also, or else you all can mark that similar questions, take the screenshot of the entire portion and you can zoom it and see which questions are similar to the ones we have done in the class. And then you all try these questions completely on your own, remaining ones. And whichever answers you are not able to get, you can message me on this number 9426312774 and I will help you out with those questions. Okay. So best of luck for the coming exams. Prepare well for the MCQ. Theoretical questions answers are already given, so nothing to explain in that, just go through them. But however, if you find that any answer you feel is different, the given answer may be wrong, you can cross verify by messaging me whether that answer is right or not. Okay. Bye everyone. Take care. See you after your exams now.